Hello everyone, welcome back to our channel and welcome to this video. I want to believe you're doing good. I want to believe you're doing great. In this video, we're going to be doing an analysis of Gbpjpy and what to expect from the market this week. If you're just coming across our channel or just coming across our videos, I want to say welcome. It's good to have you. What you want to do right now is click on the subscribe button and turn on the notification bell because we release videos like this almost every day, letting our viewers know what to expect from the market per time, and you don't want to miss out on any of such videos. Let's get straight into the business of this video. Last week, Gbpjpy was here. That at the time we did our last analysis, the market ended last week at this region or this point where it ended as a bullish arami, which is a bullish reversal candlestick pattern, and we expected the market to go bullish. So the market only bought for 2 days. That was Monday and Tuesday. On Tuesday, it did not go far. It only bought up to this extent and started selling again. So on Wednesday and Thursday, there was not much move in the market until Friday, where we had the market make this huge sell up to this extent. That's what happened in the market last week. So let's start our analysis on the monthly time frame. On the monthly time frame, we can see last month, that was the month of June, there was much contention. There was contention among buyers and sellers. It's clear from this candlestick that you can see the body here, you see a wick here, and a long wick on the upper side. So what this means is that at the time sellers were in control, at the time buyers were in control, but the side that had more control of the market were the buyers. It was the buyers who had more control of the market, although sellers flexed some muscle towards the end of the month. Or at the end of the month, sellers flexed some muscles and they were able to close the market this way. So yesterday was 1st of June, so we see what happened in the market. You see, the time frame is just beginning. Then on the weekly time frame, 2 weeks ago ended as an inverted pin bar. You can remember I told you something about the inverted pin bar, or I say it frequently, that I don't exactly consider the inverted pin bar bearish reversal candlestick pattern. I agree to the fact that it shows bearish rejection. At the same time, it also shows that there are still buyers in the market. So that's why you could see last week the market bought a bit, then sold later. So you can see that within last week, the market sold and went and got below the 10-day simple moving average, but later bought again and closed above the 10-day simple moving average. So the market closed as a bearish engulfing bar on the weekly time frame. It closed as a bearish engulfing bar on the weekly time frame. And let's see the daily time frame again. On the daily time frame, we could see that at this point, the 10-day simple moving average crossed over the candlestick, which is a bearish entry trigger. Then there was a huge sell on Friday, and there was a rejection back to this region. Then let's see what happened on the 4 hours time frame. On the 4 hours time frame, we could see here this region there was contention among buyers and sellers. At the time buyers were pushing, at the time sellers were pushing, but at the end or towards the end, sellers took control. And on Friday, only on Friday, that we had a huge move in the market throughout last week. We had the market sell from here down to this region, then bought again up to this region. So what do we expect from the market? Of course, we can also see that the month of July is just opening. So we have to know what to expect from the market on the overall. What do we expect from the market throughout this month? Considering the fact that On the daily time frame, we have a healthy bearish candle. On the weekly time frame, we have a bearish engulfing bar. Then on the monthly time frame, we can see a bearish rejection on the previous candlestick. So I believe I'm expecting the market to go bearish this week. Even though on the 4 hours time frame, we can see this is a pin bar. I agree to that. This is a bullish candle. There's possibility that the market is going to buy. Let me mark that region. There's possibility that the market is going to buy back to this region. It's possible. Then afterwards it's going to sell, because this is a huge bullish rejection, and of course this is a resistance region. This is a resistance region. So when it's sold down here, there was a bullish rejection and it's pushed it. It made a significant push. I think to about half of the candlestick was pushed. That's half of what the sellers pushed. The buyers were able to push up to that extent, and that was when the market closed. So there's a possibility that it's going to buy up to this point, retesting this resistance region, then sell again. Also look at the weekly time frame. Remember we said that okay, look here. Here we can see there was a huge sell. It's sold down to below the 10-day simple moving average on the weekly time frame, then bought again back to this region. So there's contention among buyers and sellers. There is also a proof that there is more selling pressure than buying pressure. So I'm expecting the market to buy. It's possible it could buy up to that, retest that resistance region, then sell again. And this is the next resistance region. This is the next resistance region. So I'm expecting the market to sell down to this region, because there's likely to be a buy, like we've said, since the 4 hours has shown us a pin bar. So by the time the next bearish move is going to start, so when it buys up to this region and it's going to make a bearish reversal candlestick pattern, by the time that next bearish move is going to start, it's going to be quite huge. It's going to be quite huge, and it will sell down to this region. That's what I'm expecting from the market this week. Let's see what will happen on the monthly time frame. Okay, by then, okay, you can see by then it's going to come in contact with the 10-day simple moving average on the monthly time frame. So when that happens, we're still going to observe the market to see if it's going to break the 10-day simple moving average, or it's going to start buying again. So for now, we're not going to say much. We're going to speak based on what the market is presenting. So that's how far we're expecting the markets to go this week. If you have a different opinion or you have any question, you can use the comment section. Then if you want to register for our complete forex training, check the description of this video. You're going to see a link where you can register for our complete forex training. Remember, we say trading is a highly risky endeavor. You don't want to venture into trading without a proper knowledge. Then if you want to subscribe for our signal service, we'll give proper entry, stop loss, and take profits. Also check the description of this video, and you're going to see a link where you can subscribe for our signal service. And if you want to get a copy of my book, Trading Without Tears, check the description of this video. You're going to see a link where you can get the soft copy. If you want the hard copy, send us a direct message to any of our social media handles requesting for the hard copy. Tell us your location and we'll tell you the cost of shipping it. Once your payment is confirmed, you have the book delivered to you. So that's it from us on this video. I hope you got value. See you in the next video. Bye for now.